Hey guys, let's do a quick silver update. It is June 3rd, 2026, and I have the chart in front of me. So, starting out on the daily time frame, we have only the line view. I'm going to go ahead and just add in a fib channel here. Again, this is the SI1 exclamation point, or the silver front month futures option chain is the continuous rolling option chain. I believe they roll it something like 20 days from the end of the don't quote me on that. 20 days from the end of the contract, somewhere in there. They switch it over. They don't switch it over on the last day or anything like that. So that's what we've got. We're using the fib, uh, the fib channel tool. So we're gonna put 0 at the top on our swing high pivots up there, and we're gonna drag the 1 down to the swing high pivots on the bottom. On the daily close, we have, we'll call it just 2 hits on the top, 2 hits on the bottom, really 3 hits on the bottom, possibly some structure here. So we're gonna draw that in, and we're gonna overlay our candles, and we're gonna see that the candles often wick to the next fib level, not surprisingly. And then for good measure, we're gonna go ahead and flip to our weekly. And okay, so we're going to see that on the weekly basis, you're going to see that this 382 comes into play as the peak high, not the 0. Let's go ahead and do a line just to illustrate that further. Okay, so far, the weekly closes have come back down into the 382 of the channel on a regular basis. We got 3 hits. We got a little bit above it. Now we're sitting on top of it. And on the bottom end, we've hit the 1 just like we closed on the dailies with 2 touches there. So we can see that we're kind of, with this futures, rolling futures structure, the rolling futures chart rather is acknowledging this sort of Fibonacci multiple channel structure that's kind of oscillating between support and resistance on daily and weekly closes. All right, so I felt like this particular view is the most, I guess it's the one that all the price parts integrate into consistently after looking a number of different views of this. So where are we today? So let's go ahead and take a look at our last candle. This is a red candle. So this guy, we tested the top again of the parallel channel, swing high, came down, and started what looks to be a parallel bear flag. In particular, what's called an inside bar pattern. Now, a lot of inside bar traders use a time count, and we've been kind of long in the tooth on this one, but I'm going to call it inside bar for just clarity's sake. So inside bar is, you come in and then you kind of bounce around, and usually it's defined by the widest wick of the widest candle. Some people will look at the body, they'll look at this thick body candle, but in order to validate a change of character on the inside bar, we need to see a daily close outside of these wicks that have been defined kind of in there. And so it looks to be the case that we're going to get that close today in 18 minutes. So that doesn't necessarily, this could be a false breakdown and so on. So we're probably looking tomorrow to see if we close, but let's just assume that what looked like was going to happen is actually going to happen. That we're going to have a sort of a continuation symmetry move from this inside bar consolidation. And that's going to be something like this, where we copy this guy. So we could take it from there. Again, I'm on logarithmic, so I'm gonna kind of be fairly conservative and treat this as an ABCD pattern, something like this. Something like that, right? So where we have the symmetry from the top of that guy. So then that level, the more conservative, takes us to about $64. That is consistent with some of these prior lows. Makes a lot of sense. I could see a lot of traders putting their limit orders in that area. We also have a little bit of resistance, prior resistance here that we caught on the way up. But that would be our first level. Okay, first level, $64. Okay. Notice it's kind of in conjunction with our 618 support line, which hasn't been terribly indicative. A little bit. You know, we got a bounce here, we got a bounce there, we got a little bounce there. So that could be it right there. This area. That could be the last dip of silver. Could be. But let's not assume that. Let's look at this for a couple other data points. Okay, so one of my thesis here is that momentum support is going to play a role. And so the bottom screen here, you have the green is above the 200-day moving average, red is below, and this parallel line is at 0. And one thought might be the 200-day moving average is support, and one touch of the 200-day moving average or close near the 200-day moving average, and away we go. So that's reasonable. Okay, so but if we look left and we see where have we dipped below there, where would be sort of the histogram's version of support, and it looks somewhere around 8%. See that over here, 8%. We're going to say in the extreme case, 8% below the 200-day moving average. So let's go ahead and take a look at 8% below the 200-day. So we're flattening out, but it's off. We're flattening up, but we're still going up. So we're going to give it somewhere in here. We're going to drop down to 8%. So 8% below our 200-day moving average. Momentum support in the area of $61 to $62. This was this other low, this wick low. Now, this comment is directed specifically at daily close, and what I see here on the bottom and what I see on the chart is that we could get some dips down into the mid-low 50s, but the daily close is most likely not going below the low 60s. Call it maybe $63, because we have this as the bottom so far, wick wise. So daily close probably staying up here in the 60s. That we still may get a crazy day that comes down to this. This is going to be our key fib level right here. And this area is an area of the mid 50s. Notice that we have previous resistance back to the left here. Okay. So I think that wick could sniff this area. Some people have it going a little deeper, but this is probably very stink bed level target down here. Actually, I'm put it on even on top of this wickety wick, just because if you want to get filled, you better stay above it. Because it's guaranteed there's going to be orders in this. There's going to be a lot of orders down in this block down here. I'm using this tool. Look at all of them. And here we go. A lot of orders in this area. A ton. Once we get down into this this volume profile zone over here, forget about it. Forget about it. You're just fighting the crowds because they're positioned down there. Guaranteed. Okay. That would be your stink bed. Stink beds in the area. Anything below And 58 would be a good one. Anything there below down to 53 is going to be stink bid level. Above that, we have minor level at 59, and we have a probably most likely level that at some point in intraday we will touch $64. So that's my forecast. You get what you paid for. Always keep that in mind. This is not investment advice. I'm not your investment advisor. And have a great day, guys, and we'll see how it goes. Oh, one thing before I go. Yes. All right. So one of the things I don't think we've seen yet that we need to see is RSI divergence. And this retracement here to $64 would give us that opportunity to print the divergence. So what that's going to look like is something like in the momentum, a equal low here with a higher low on the RSI. Now it might be pretty mellow. There's not a lot of room left there, but that's what I'm looking for. There's hardly any divergent points. If the higher high is moving down, the higher high or the lower high is moving down on RSI. If higher highs going up on these RSIs, same thing on the bottom. If it's going up, it's going up. So we really need to see to say, hey, the ship's about to turn around. I think we'll see something on this RSI. Now, could be, maybe it's not what you're looking for. Maybe it's not the double bottom version of the divergence. It could be like a triangle breakout version. Hard to say, but we should see some kind of preceding movement, which we don't yet in our RSI. So something to keep an eye on. And other than that, that's all I've got for now. Have a great day. Keep an eye on silver. Thanks, guys. See you soon.